Good day to one and all. This is Dr. Sivaraman of inoindices.com here. I was giving the webinar spike trade call before that of the US Q2 GDP data release as the pre-GDP data release webinar for about 30 minutes. And I also gave you the trade calls. So I'm going to review it now during that of the spike trade call post US GDP data release 13 to 13:15 GMT, just for about 15 minutes, just to analyze the results and also review what has happened to the market and how exactly we are able to foresee this and take positions accordingly. So for that, we use the live market analysis technique using the initial lows and the highs, which are noted down from that of the live market code page. This is the live market code page, and here you come across the GMT time frame. And what we do is exactly by 3:30 GMT, whatever the high and the low are set here are being noted out. There was a question about it. I was not able to see that question during the webinar time. So I'm just explaining it. So we note down the high and the low exactly by 3:30 GMT during that of the Japanese session. That is being set as the initial lows and the highs by that of the players. And now you see that the initial high was 1.1088 during that of the Japanese session by 3:30 GMT. And now currently you come across that it has gone up already as envisaged by that of the forecast, that they are expected to make the swing and rise for that of the US GDP data release, and they just exactly did the same. And it has come about 75 pips or 78 pips net change from that of yesterday's US session close. That is called as the net change. Then in the case of GBP also, they gained the level above that of the initial high, 1.3214, and they've gone above and they are holding it. So they are likely to go higher. And in the case of USDN, I told you that they have been holding around 103.30 level below that of the initial low before that of the data release. And so they had just done that further downward move. After making an upward move, they started making the slide and held below that of the initial low in order to make a further downward move. And similarly, in the case of CHF, they made a very nominal downward move and they are holding it. And in the case of Canadian dollar, they just breached the initial low as they were been in the range. In the case of USD CHF and also USD CAD, they just broke the initial low and holding it, not a significant move on the downside. In the case of Australian dollar, they are just above that of the initial high, so they continue to gain the levels. So after referring to that of the initial lows and the highs, we are in a position to find out that they are just firming up towards close of the European session. Then there is a gap between 13 and 13:30 GMT. Now the gap time has started. So during that of the gap time, they make false move. So during that of the gap time, if they make an upward stop and understand during the session they are expected to make a slide and then reverse the market and take further upward move. The GDP data release, which was released by 12:30, was less than expected. So obviously, they made the small dip before that of the data release and started making the spike, upward spike as envisaged. But they did not make much of a downward move, but a nominal downward move was shown, and we could have just taken a buy position and they will be in the money already, and we could have easily booked profit. And in the case of yen, as I was explaining, that they could make for the downward move, and 120.70 or 65, you can keep it as a hedge order. Okay, now they have just made the downward move again in the case of USDN. And if it is hedged, we can just watch and keep stop at entry in the hedge or close the hedge and keep 30 pips below another hedge order of watching for 10 minutes to 30 minutes. the hedging is not making profit. Then later on, they are expected to gain further upward move in the case of USDN as well as in the case of Euro and GBP during that of the US session. So they are making the moves in the market as envisaged by that of the forecast, and also you find that the players have just accumulated the buy positions before that of the data release, when the people were uncertain what is going to be the outcome for that of the US GDP data release. At that time, they have been accumulating the buy position. Those who have been holding the buy positions, they were out of fear would have liquidated the long positions because they do not want to risk during the weekend, especially when the prime data release is there. So obviously, which has induced many of the long holders to liquidate, and then the players buy all those things and positions and gain the levels now or the GDP. And once you become bullish after looking into that of the fundamental that US GDP is less than expected and try to buy after that of the rise, then the players are expected to make a dip, not making further rise. You can just note down the highs what they are set, and throughout the gap time you can watch how exactly they are holding it, and they will make a brief upward stop and during the start of the US session and start making the slide as a profit booking move. And that way they just reduced their buy positions and liquidate their buy position holding high. So for the weekend, they happily book profit with regard to their buy positions and then take away the money. And so we all have that bearish feel with regard to Euro and GBP. They created the market sentiment and acted against that of the sentiment during the weekend time and just happily booked profit to that of the buy positions. And many of the traders go in for a breakout trade buy after that of the rise, and they may find that it might be not a very good decision. So always keep in mind the quick moves or false moves in the market. Whenever they make a quick upward move, always keep in mind they set the high, hold high and liquidate their buy positions. And afterwards they make a small dip and then hold. That will give that impression to that of the traders that after the rise, there is a selling pressure in the market. So the traders might think that, okay, it is not able to hold high, it is not able to breach certain higher levels or resistance, and then they take sell positions. After the drop, some traders take sell position, especially those who do the scalping. But the players buy again that and gain the levels towards the late US session, so that those who have gone short come for a big short covering. Because always keep in mind, whenever they make an upward spike, they do 3 times the spike. And in the first time rise, if we take a sell, they might make a dip, and that might be a sideways move or a nominal dip of 15 to 25 pips. And if you don't book profit, then they make further higher levels rise, and then we will be vulnerably get trapped. So always wait for the net change to happen fully, about 150 pips in the case of Euro and GBP, and later on, if you try to take sell position, once the new high is not being breached, then we will be able to book profit in the sell position. But don't be in a hurry and try to take sell positions as a counter trade during the intentional rise. As I explained yesterday during the Tracking Live the Forex Market Together webinar, that we need to identify the type of moves they are doing it. And especially they hold above the initial high for one session, they are expected to continue to hold for the second session also during the US session. So in such a scenario, sell and buy is not advisable. You can buy back again during the US session start between 13:30 to 14 GMT when they make a small dip and induce the traders to take sell position. At that time, you take a buy when they are making about 25 to 35 pips from that of the higher level, and stop cutting the intermediary low for about 15-20 minutes around 14 GMT. At that time, you take a buy, then they will continue to gain the level from 14:30 onwards, and they will handle that crosses during the mid-year session briefly, and from 16:30 GMT onwards, they will start gaining the levels in the case of Euro and GBP. At that time, you will find that USDN also gaining the level after making a brief downward stop, and they started gaining the levels in the case of USDN. And in such a scenario, if it is hedged, you can close the hedge and keep another hedge order below that to limit the risk, and they will start gaining the level as a contrarian move. Now you come across all over, they are making the US dollar weakening move. But if we carefully watch that in the case of Euro and Euro GBP and Australian dollar, the net changes are higher when compared to the downward net change in the case of Canadian dollar, Swiss franc, and it is less than that of the downward net change in the case of USDN. USDN, they have done about 250 pips downward move, whereas in the case of Euro, they gain only 81 pips. In the case of GBP, they gained only about 76 pips. That way you can easily understand which pair they are handling at a given time. And then accordingly, when they are closer to low or not breach the low for 30 minutes, you can take a buy. Then definitely that will give a profit booking opportunity. There is no question of bullish and bearish involved in that. You need to read the intentions of the players, and every currency you come across a buy level as well as a sell level. And whenever it is near that of the buy level, you should not sell, thinking that technically it might go down further. Similarly, whenever it is near that of the high, it is not advisable to take a buy position, because they might make a dip and hit the stops before making further rise. So don't be in a hurry and avoid taking position at the market. And if you want to really buy position, try to keep about 10 pips below that of the market, so that when they make a small swing, they will be able to hit you a buy order, and that way you will have a fine-tuned entry. So whenever the momentum is good, keep 10 pips below the market, the buy order. Whenever the momentum is subdued, you can keep about 5 pips below the market, the order. That way you will be able to get the order filled, and then you will be able to really book profit when they are making the moves in the market. So if there are any questions, I'm willing to answer those questions. So they are making the move in line with the expectations, created all the bearish sentiment in the market, induced the traders to take the sell position or just to liquidate the long position, and later on they started gaining, now taking the excuse that US Q2 GDP data is less than expected. Even otherwise, they are expected to make the gain for the weekend. So ultimately, they require only a trigger in the market, nothing more than that. Okay. Then GMS got a question. So this fast move will then turn around today, or it is a false move? It is not a false move. It is an intentional move, and they will just make a small dip, because as I told you that they have been holding the Euro and Australian dollar, excepting US GBP, holding above that of the initial high for more than 30 minutes. That means they are slowly accumulating all the sells at that level, and they are expected to swing there and make further rise. So it is an intentional move on the upside. So even though they gained about 30-40 pips quickly, they have to give a knee-jerk reaction in the market. Afterwards, you come across that slowly they are gaining the level. Slowly they are cutting. Every 30 minutes they cut the new high and form the new high. That is an indication that it is an intentional move. And if it is an extended move, they form the high in first 30 minutes. Afterwards, they don't breach it for 30 minutes and hold high for 2 hours and start reversing it. So that way you can differentiate the extended move from that of the intentional move. During the intentional move, they will frequently, every 30 minutes, breach the high. If they are making the rise, they will breach the high and form the new high. But on the downside also, if they go below that of the initial low, then they breach the low for 30 minutes. Every 30 minutes, they continue to breach the low. Then in that case, it is an intentional move on the downside. and you have to wait for 2 sessions before taking a buy position. So that way you have to identify the type of moves and then take position. Now levels for CHF. What levels? You want the trading levels for CHF? CHF, these drops are great buy opportunity, but again keep in mind. Okay, now USD of 99.50 they showed for the day, a week, and they come down to 97 level, and around 97 they will just go today and probably go up to 96.50 during the US session, and again next week we will come across either way volatile move. From the low they will gain it up to that of 99.50 next week in the case of USD. So they are expected to make again the swings for the week beginning, because weekend and the week beginning time they make such volatile moves in the market, upward as well as the downward move, in order to hit the stops and also induce the traders to commit both the sell as well as the buy positions. And later on they make the intentional move for the entire month from second week. That way they trap the traders, those who have gone short, thinking that market may not be able to rise for the upward move, and they take sell positions after the rise, thinking that it is not able to breach the resistance. At that time, the players will try to rise more. They have to create, first of all, the sentiment during the first week, and then continue to gain the levels in all the 3 currencies, Euro, GBP as well as USD, and that will give the surprise. And now you find that every analyst say that all the 3 currencies are expected to gain levels. And how can it be? Because earlier everybody was talking about US dollar gaining and US dollar weakening move. But when they have seen many of the occasions that all the 3 started gaining and dropping, they thought that it is a scenario to be followed in the market without understanding what the players are doing. Actually, the players were making massive upward and the downward move in the case of yen crosses by making such contrarian moves. Is there any question so that I can answer it? Otherwise, I'll conclude the webinar. They will again gain in the case of USD above 99.50 from that of second week. Okay. Will the USD continue going down? No. USD they already set the low, and they will try to gain it to 103 again, to 103.50 or 75, and again next week they will come down to that of 102 level and start gaining it. During the week beginning time they will come down, and by weekend we will be able to see that it is going to 106, 107 level by next week. Afterwards, they are expected to continue to gain the levels in the case of USD along with that of Euro and GBP from second week of August. So I'll come back on Monday and give the forecast for the next week during that of the Asian session live market analysis, and also explain to you what sort of trading you can take it during the new month time. So wish you all happy weekend. Hope you enjoyed trading the currencies following the forecast and the trading strategy. And how about GBP? GBP is also expected to make range bound swings next week, and today they will gain up to 1.3385 or 3285 or 33 level, and then again next week they will come to 31 level, and probably before that of the non-farm payroll they will make one extended downward stop, and in the case of GBP or Euro wherever needed, and then reverse the market, because they have to go in for shift in trading zone. For that they will try to make an extended downward stop, and like how they are done in the case of USD, extended downward stop, and in the sense they just make a drop of about 150-200 pips and then reverse it within the session or within 2 sessions, and that is called extended downward stop. And then they will make shift in trading zone on the upside. Look for that, then you will be able to understand shift in trading zone is in the process, and they will try to continue to gain level. Then you can do position trade, hold the buy position what you are accumulated during the first week of August, which can be closed by end of August at a substantial higher levels. So I take this opportunity to thank FX Trade for the facilities provided to present the webinar. Hope you enjoyed the webinar and also seen how exactly the market moves can be predicted. Then I'll come back by next week, Monday, and give the Asian session live market analysis for you to develop the insight about the market. Wish you all happy weekend. See you on Monday.